Hey, my name's James Wilkinson and welcome to my YouTube channel. Now in this video, we're going to talk about are property prices likely to crash in 2023. We're going to deep dive into all of that and more. Now, also while we're here, I want to ask you to help me get to 5,000 YouTube subscribers. We're so close. It's possible we'll hit that in April. And you can help me get that a little bit closer to getting those 5,000 subscribers by smashing that subscribe button over there. Go on, do it now. Smash the subscribe button, hit the bell notification. Maybe even if you look below, you could be the person that gets us to 5,000. And also like this video, guys, because that really helps push this out to more people on YouTube. So, house prices. What the hell is going on? Well, it's been a turbulent time, hasn't it? We've had really a difficult time during the pandemic, and logically, when you looked at it, when we were in lockdown, it would have made sense that the property market dropped. In fact, everyone thought that was going to happen because businesses were shut. It made sense that some of those businesses ultimately went bust, even with bounce back loans, even with furlough schemes. It was really hard for a lot of people. But what actually happened was that people weren't spending so much, so they saved a ton of money and then they used that to invest in properties. And I have some properties in an area called Hastings, that's in East Sussex. And Hastings has been fairly slow growth. It's okay, nothing to set the world on fire. But during this period, it went crazy because a lot of people wanted to move out of London, where in London they can afford a flat. In Hastings, they could afford a house for the same kind of money, and it isn't actually too far into London if they want to continue working there. So house prices in Hastings went through the roof, and that happened all around the country. In fact, the last 2 years have been some of the biggest growth in property in a long time. Coupled with that, we had very low interest rates, so we were on 0.1% as a base rate, and now we were on 4.25% as a base rate. Now, interest rates have gone up for the 11th time. So we've had 11 back-to-back meetings now. And until inflation is under control, we can't really rule out any more interest rate rises. However, it does sound like inflation is looking like it is going to be under control. Hopefully next week we get some new data on that. America's just got their inflation down to 5%. We're at over 10% still. I don't think we're going to drop straight down to 5, but let's hope that we get at least to 8 in the next data would be good, just to feel like we've got some momentum. And that will show the Bank of England that their policy is starting to have some impact. The problem is, this data just lags. So when they increase the interest rates, for a lot of people, nothing really happens because they're in a fixed deal. It takes time for them to get the new deal in order for this sort of stuff to have a real impact. And so if you're on a 5-year fixed and the interest rates go up right now, yeah, you might have a little concern about it on your remortgage coming up 5 years down the line, but it's probably not going to worry you too much. And so there was talk then late last year, because Liz Truss and Kwasi had their mini budget, and they were expecting off the back end of that, because it did go down very badly with the markets, we were expecting the base rate to go up to 6.5%. We peaked out at 4.25 now, and it is sounding like, from the Bank of England's language, the last 2 meetings, they have indicated that we're pretty much at the peak on interest rates now. Now, there are people that are going to comment on this video and they're going to say, look, interest rates could go up to 10%. They're not going to go to 10% if inflation drops to 7%. They're not going to. And in order to bring down inflation, we need normally to raise the interest rates higher than the inflation amount. That pushes it down, squashes spending and stuff like that. So, look, we're not going to go to 6.5% interest rates. However, this has had a big impact on people's affordability. And so when people come off their deals, then they are obviously going to have to pay more money each and every month. Now, when you get a mortgage, you are stress tested to 4 to 5% to see if you could afford that kind of rate. And so some people will be okay. But we don't know what's happened to their situation, because that stress test was on just if the mortgage rates went up. It was not also stress tested on gas and electric going up, all the other costs of goods going up as well. And so it is going to be interesting to see what happens when people start coming off fixed rate deals this year, what will happen. Now, in order for the market to drop and the prices to go down, the people need to sell. And what will happen, and has started to happen, is people have just taken property off the market. If they're not desperate to sell, the price won't change, at least on that property from that one person. But right now, there are less properties on the market, there are less transactions, and that's why we're not seeing these huge drops that people are predicting. Some people were saying initially, particularly when we were talking around this mini budget, that we might have a 30% drop in prices. There's still people out there, there's a lot of YouTubers, some of you comment about other YouTubers on this channel. There are other YouTubers out there that are still adamant that the 30% drop will happen. Now, I'm not saying it won't. I feel it's unlikely that it will happen. And I'm still sticking with my prediction that in 2023, I've said this in multiple videos, I feel this market will go down 8%. There it is. You can come back and quote me on that if I'm wrong. So far this year, we've pretty much had a flat market in January, February and March. Halifax and Nationwide both have slightly different data, but even if you just average both of them, not really much has happened. At the back end of last year, however, we did see some movement and we did see some bigger shifts. There was 1 month where we had a 2% drop. There was another month with a 1% drop. So there were some bigger shifts at the back end of last year. This year, it hasn't happened like that. Now, the reason I think this year is not going to go down more than 10%, and I could be wrong, but the reason I think it's not going to go down more than 10% is I think that we would start hearing or knowing about that kind of stuff now. So what I mean by that, and I've said this a few times, is these big companies, Halifax and Nationwide, the Mortgage Works, Virgin Money, all of these lenders have some data that nobody else has in the market. And they're the only people that are out there that know the deals that are being agreed today. So now we're in April. They know the deals that are going to complete in September or October. They know that because it takes 5-6 months to buy a house. They've already offered mortgages in principle on those properties. They've already had their surveyors go round some of those properties. They already know what the people are asking for. They already know what the agreed sales price is at this point. Now, they could go back and negotiate. Of course, people could. But what I feel it indicates is that the market is going to slow down this year, and no one's disagreeing with that. But I think it's going to happen at a much slower rate than people expect. You would get some months in there to get to 8% down where you'll have a couple of percent drop down and a 1% drop down. I'm sure that's going to happen multiple times throughout this year. But where I feel the market will maybe, if it does crash, it will be in 2024. What could save us though is the fact that inflation is expected to drop off a cliff. And so in real terms, house prices are already cheaper, because they've had a drop last year. They've had a flat period this time. But now inflation has been high for so long, you've really got a 10% reduction if you carry in that inflation as well, haven't you? Because the value of things that we could spend 100 grand on last year is not the same as what we would get with our basket of goods this year. And so you've had a course correction there. That does make an affordability improvement for people as well. And so this is really going to be based on will this year crash? It's really, I think, going to be determined by the inflation data for April, May and June this year. I think that's what you need to be looking at more, because if the inflation doesn't come down, these interest rates are going to go up, and that's going to put more pressure on the market than anything else out there. Other things look quite good. We've got a strong job market, and we haven't got lots of property on the market for sale. We're not seeing people slashing their prices at the moment. We're not getting indications from the lenders that people are securing deals way below market value. They would be telling us if they felt that, and that's going to be what the data, that data for me is better than a lot of the data out there. It's better than the surveyors, because the surveyors and all these people that get in the RICS report that get questioned, a lot of them are small little independent companies, 10, 20 people, and so they've got a little idea, whereas Nationwide or Halifax, they have a huge amount of data. So I think property prices are going to go down, but I think as an investor, that's opportunity. A lot of investors have been saying, oh, I'd like to buy my house cheaper, so if it is on sale by 8%, great. But why don't you look at, not rather than finding a property that's 8% cheaper or waiting for that to happen, why don't you go and buy a property that you can add 20% in value? Then who cares if the market goes up or down? That's where you're going to make money in your property, not overthinking and over worrying about shifts in the market. If you buy property, I'm not an advocate of flipping. I think you should buy and hold. Property always comes good in the end. You're going to make cash flow from your rent as that goes through as well. Let me know your thoughts and comments below. Do like this video. Help me get those 5,000 subscribers by subscribing and hitting the bell. Comment below in what your thoughts are, and go and check out all the other content on my channel, including this video right here.